Well, hello everybody and welcome to the webinar. Our topic today is communications tax, how to mitigate your risk with ease, and I'm Mark Schlossberg. I'm your moderator. And today's webinar is presented by Wolters Kluwer and SureTax. And Wolters Kluwer is a leading provider of tax accounting and audit information and software services, and SureTax provides the most comprehensive and technologically advanced tax calculation solution on the market. And if you're interested in learning about communications tax and the compliance process, you have come to the right place. We have a terrific agenda and some expert speakers. And I can see that people are still logging in, but we have a full agenda, and let's get started. First, I want to start with some housekeeping details. Everybody's microphone has been set to mute, but you can still communicate to us through the question and answer panel on your screen, and you can use that for any questions you might have. That also includes technical issues that you may experience. I can also see that someone asked if we can get a copy of the slides. And yes, we are recording this webinar, and afterwards we can give you a link to the webinar and a copy of the slides. And as always, this is an informational webinar. You should seek competent professional legal counsel for any matters of the law. Today's webinar will last about an hour. We're scheduled for 45 minutes for the presentation plus 15 minutes for question. But if you have questions during the webinars, please feel free to type it in and we'll get to those questions during the presentation. If not, we'll have a question session at the end, and if we don't hit them there, we'll send you an answer directly through email. During our first 45 minutes, we're going to cover communications tax and the compliance process, and specifically we're going to talk about the definition of communication service providers and who's required to comply. We're going to talk about tax specifics, and then we're going to move on to solving our tax obligations, looking at tax calculation, billing and invoices, and then we're going to go over to questions. As I said, we have a great group leading us through the information today. We have distinguished experts in the field of communications tax. For Mike Sanders, we have Brent Reeves, and Brent is the Vice President of Business Development for SureTax. We have Tim Cook, the CEO of BluLogix, and BluLogix is a leading billing services provider for communications companies. We have Linda Carlson from Wolters Kluwer Professional Services, and Linda is an attorney by training, and she works with companies to formulate their communications tax policy. And then we also have David Rubenstein. He's a CPA, and David is one of the leading experts in communications tax and has experience providing policy guidance to some of the largest communication providers in the world. And that's who we have today, but we wanted to know before we got started a little bit about you. And so while I'm reading this, feel free to read ahead, but we wanted to know how much experience you have with communications tax. So we have some categories, and one is I'm new, so that's less than 6 months. I'm not quite so new. I've been doing this for a while. That's 6 months to 2 years. Third category is I have over 3 years. Fourth category is always my favorite. I'm a communications tax lifer, so I'm going to place that at 10 years or more. And there's a category called other, and I don't quite know how to explain that to you. But if you could look at those and see where you fit into all of that, and we'll give everybody a little time to respond. And that way we can gauge our content to your experience. And let's take a peek at the poll results and see where we are with this. Wow. So we have a pretty balanced group. Congratulations to the communications tax lifers out there. 7% of you said you were other. I'm inclined to send emails to you for explanation. And then we have, 40% of you are new. So that's very good. So for those of us who have experience, even if you are new, we know that taxing authorities everywhere rely on communications tax as an important source of their revenue. Communication services is the most heavily taxed items in the world, are the most heavily taxed items in the world. Worldwide, the average communication service is taxed in a rate in excess of 16%. In the United States, it tends to be higher. In certain jurisdictions, we can see impositions dozen or more impositions for even the simplest of tax. We also know that communications tax is complicated. There are thousands of taxing authorities out there. There are hundreds of different tax rules, and there's a variety of methods. But as a communications service provider, you're required to be in compliance with your tax. So let's start off with you, Brent, at a pretty basic question. From a tax perspective, what is a communications service provider and who's required to file?
Yeah, thanks, Mark. So, this is a common question that we get, and it seems like it should be an obvious one, but it isn't. Truly, a communication service provider is anyone that is in the chain of delivery of the communication service to an end user. That's the obvious ones like CLECs and ILECs, but also interconnected VoIPs. Interconnected VoIP is considered a communication service provider, as well as non-interconnected VoIP, and I'll talk about that in just a second. MVNOs, obviously mobility providers, which would encompass both cellular and wireless VoIP providers, and then resellers. The reason I kind of point out the reseller avenue right there is just because what we hear often is, well, I'm not actually providing the service. I'm not actually a carrier. I'm just reselling someone else's solution, i.e. an AT&T or Verizon solution. So, do I have to comply? Am I responsible for the tax? And the answer for that is yes, and also maybe, depending on how the organization of the contractual relationship between the parties is set up. Resellers are, again, considered anybody who is in that chain of providing that service, but where the compliance end falls is really dictated by, who is providing the service to the end user. So even if you sit in the middle, you could even be a wholesaler and still be required to comply based on the fact that the person who ultimately is providing the service to the end user is responsible for complying with taxes, fees, and surcharges. And if that end user who you are selling to, that reseller who you are selling to as a wholesale provider is not complying with all of those obligations, then that burden could fall back on you even as a wholesaler. What I don't have listed here, but what has come up to the forefront as of late, is agents. As a general rule, agents who are under commission-type structures who do not brand the product and solution under their own name are not considered communication service providers and therefore not subject to compliance. However, what we are seeing in the marketplace today is that many of these agency relationships, especially larger ones that have distributorships, will have terms in those agreements that actually make them responsible for the collection and remittance of tax. And it's not just collection and remittance of tax to the carrier, to the provider, but we've seen where it specifically states collection and remittance of taxes and fees to the authorities, and in which case that places you squarely in the eyes of compliance. So you definitely need to consult with your professional as well as consult with your contracts to determine whether or not that is you're going to be applicable to that service, you're going to be applicable to those laws. Some common questions we get that I'm not going to spend a lot of time on, but I do hear a lot around questions about, well, we've heard that there's de minimis and systems integrator types of provisions. There are those types of provisions. In these cases, if you think you're going to fall under one of those provisions, we definitely recommend that you reach out to your counsel or your local telecom tax professional to determine if, in fact, you would fall under these provisions. It is our experience, however, that even if you think you're going to fall under those provisions, that the cost of complying and kind of controlling your own destiny, if you will, as it relates to complying with federal, communications, taxes, fees, and surcharges is low enough in the sense that it's really not a risk reward that you want to take. If at all possible, we recommend that you, as a provider, take control of your own destiny and try not to fall underneath these provisions because the penalties associated with doing so and then doing so inaccurately far exceed the cost of compliance in those areas. So just an area of note that I wanted to point out. What I've done here, just to kind of show an example, I talked a little bit at the beginning, mentioned non-interconnected VoIP. So just a real quick, kind of differentiator between interconnected and non-interconnected VoIP. Interconnected VoIP is a VoIP provider that enables communication services that will, at some point in time in the communication bridge, touch the publicly switched telephone network, and in which case you are considered an interconnected VoIP. Now, there's also non-interconnected VoIP, which just simply means, if you want to think of it more along the lines of a computer-to-computer, kind of the original Skype model, if you will, to where the communication package will never hit the publicly switched telephone network, and in which case, oftentimes we're hearing people bring up to us, well, I'm a non-interconnected VoIP, therefore I'm not subject to any taxes, fees, or regulations, and that's simply not the case. So I did want to kind of show an example. This is a screenshot that we pulled off of the SureTax portal, to where this is a non-interconnected VoIP charge, but you can see that even though non-interconnected VoIP is not accessible for Federal Universal Service Fund charge, it is accessible in some places for local taxes and fees, as well as the Federal Cost Recovery Surcharge, which is sometimes referred to as the TRS. So in summary, all the traditionals and all the normal areas that you would see are subject to comply, but also the VoIP products, as well as the non-interconnected VoIP products, would also fall under areas of compliance. The last side before I turn over to our tax professionals, David and Linda, is I just wanted to give an example of what that looks like if you're an interconnected VoIP. And I chose Texas as an example simply because there's a lot of different fees and surcharges in the state of Texas. So you can kind of see here briefly, and again, this is just pulled out of a quotes area of our SureTax web portal, that an interconnected VoIP service, and I believe this is Dallas, is subject to a number of different cost recovery fees, Federal Universal Service Fund charges, 911 fees, as well as local things like the Dallas MTA and both city sales tax as well as a state cost recovery fee. So you can see that compliance goes far beyond just sales tax. When you are providing communication service, you do have to think about all these fees that are attributable to your product.
All right. Well, Brent, thanks for covering who's required to comply and giving us that detail. And so now we know who. Let's talk a little bit about the taxes. And Linda and David, if you can take us through that.
Well, Mark, as you alluded to earlier in the presentation, the taxation landscape for communications is actually very complicated and complex. At this point, there are over 12,000 state and local authorities that are imposing taxes and fees across the country. The imposition rules for these taxes and fees, of course, all vary. And in addition to that, the rates are constantly changing. That's particularly true in January and July. Most of the current statutes and regulations which govern these were originally drafted to cover plain old telephone service, POTS lines, landlines. And so because of that, and because they're very slow to amend them, they actually lag behind technology development. So the taxability of emerging technologies such as SIP, unified communications, and web conferencing are usually not addressed in these statutes. So the companies operating in multiple states generally turn to a technology solution to help them manage the complexity of tax calculation. Now, CCH actually has a very robust database containing 588 tax categories. And the reason we actually need all these unique tax categories is to address the fact that the same product and service will be taxed differently across varying state jurisdictions. And I really think an excellent example of this kind of disparate tax treatment is in the IP-based cloud services. Wouldn't you agree with me, David?
Certainly, Linda. And it's all types of cloud services. We have obviously the voice service of VoIP. There's cloud collaboration service today, ancillary service for the VoIP, such as web conferencing, which you mentioned. People constantly asking us, how do you tax VoIP? How do you tax cloud collaboration services? Well, when it comes to VoIP, in our CCH database, we have 3 different groups just dealing with VoIP alone, with about approximately 40 items. And the question is, why do we have so many items which are categories with unique tax rules? The reason is because every category is there because it has a unique rule. on a state level. You can have different flavors of VoIP. You can have all-you-can-eat VoIP service. You can have VoIP service which is being billed based upon the minutes. You get intrastate, interstate. There's a lot of different variables of that. Question: how do we create the rules in our database? And how do we formulate taxability rules? Well, to start, we have to create a baseline. In order to do so, we need a working definition. The key to telecom research is how telecom service is defined, and you would think this is should be fairly simple. It's voice service. Well, let's look at Streamlined. Streamlined sales tax was supposed to create a standard definition across and hopefully taxability rules, one would hope, across the states of the union. And indeed, we have a definition. Under Streamlined telecom service, defined as electronic transmission, conveyance or routing of voice, data. Once again, data. What's data service doing here? Voice equals data? That's right. Under Streamlined, voice equals data service, it's called, quote-unquote, telecommunications service as under the Streamlined definition. Would we have thought this would be the case? Absolutely not. But indeed it is. In addition to telecom service, which is that voice or data, et cetera, between 2 points, we also have something called ancillary service. And this comes up very important when we're dealing with things like over-the-top services and many of the emerging technology services. Ancillary service is defined as the services associated or incidental to the provision of telecom service. And that's where that web conferencing is going to fall under. Well, is Streamlined going to result in Streamlined rules? And the answer is that the Streamlined rules, when we look at a pilot of Streamlined, and we ran a pilot of a few states, in Vermont, Tennessee, and Utah. So we're dealing with the same definitions. All 3 states are members of Streamlined, and all 3 are the same definitions. Is the taxability the same? Absolutely not. In Vermont, web conference bridging service is treated as a non-taxable ancillary service. Vermont does not tax ancillary services. Those are services connected with the telecommunication services. In Tennessee, web conferencing is also defined as an ancillary service, but yet it's taxable. Same definition, different rule, different ruling. And the reason is because Streamlined has created common definitions. So we have our baseline definition. However, the rules can and will vary state to state. It's even more extreme. You look at Utah. Utah takes web conferencing bridging service. It's also taxable, but for totally different reasons. It's a license of software. Now, it's rather interesting for taxability buffs why they tax software there. Utah states that this is a quote. The software is tangible personal property. Have you ever touched your software lately? Well, that's how Utah looks at software. But the bottom line is, it's not very streamlined, is it? The fact of the matter is taxability in telecom is driven by definition and bucketing of services into categories, and can and will differ from state to state.
So on top of all that variation in state-level taxation, there are also thousands of local telecommunication services, and it's often not clear to which products and services these taxes apply. So by way of example, which local taxes and fees would apply to VoIP? Well, local sales tax seems fairly obvious because it's generally taxed at the state level and the local follows the state. Now, the 911 is a per-line charge, so that would also apply to a VoIP line. One would expect a local gross receipts tax generally would apply, and often a local occupation tax too, but there are some exceptions where physical presence is required. Now, franchise fees, on the other hand, generally only apply to cable service and would not apply to VoIP.
Local ordinance for telecom taxes tend to be very cryptic. A typical local ordinance will say that this tax is imposed upon telecommunication service, quote unquote. Not very informative, especially if you're dealing with hundreds of different tax categories that exist on a state level. When you come to the local level, you're dealing with a very limited ordinance. Even when those ordinances are more robust, like in California, they're still they're going to become very detailed and require very granular analysis. California UT, there's basically two different categories. One category are the original ordinances, which were called pre-modernized, and the other cities that have adopted a more new modernized ordinance. The reason for this adoption of new modernized ordinance, as many of you are familiar with the federal excise tax, and for those who aren't, federal excise tax 3% going back to the Spanish-American War, been around for a while, but there was a lot of litigation on it. It got a lot of headlines, and that after several district circuit courts went against the IRS finally decided to roll back and not repeal the tax, but to really limit the amount of the imposition of the tax. So now the tax for the federal excise tax only based upon local service. VoIP service is inherently bundled service. It has local and long distance inherently bundled. Therefore, the IRS came out with a ruling saying that since the FET is only on local service, not in place on VoIP. What is the difference in impact in California? Well, the ordinances in California were almost entirely linked to the FET. And the cities were at risk of losing a major source of revenue, about a sixth of their budget. So they had come out with a modernized version. A little over half the cities have done that. There's 156 cities. Many of them have come out with a modernized, more expanded ordinance in order that should not to break the link to the FET. So it comes out in California, and it's kind of typical, in order to really understand the taxability rule on a local level, we have to go city by city. Now, if you imagine doing this like 50 states study, imagine what you're doing when you're talking about doing hundreds of cities within a state to determine those rules. It can be quite cumbersome effort.
So as if the issues surrounding the state and local taxes weren't enough, obviously the most significant issues tend to fall around what we've dubbed the big daddy of telecommunication charges, which are the FCC fees. Now, currently, the Federal Universal Service Fund and Federal Relay combined are over 18.6%. And when you think about that, that actually exceeds all the state and local taxes in a single state combined. And this is really the area where we do most of our consulting work with customers, looking at their products and services and determining whether a product or service falls under the FCC's jurisdiction, and if so, what the applicability of those two surcharges are to that product or service.
Well, that rate in the FUSF now at 17.4% is a very large rate. And the problem is when we try to understand what the FUSF, or Federal Universal Service Fund, is imposed upon, it can get rather murky. On a state level, you have state codes, you have regulations, you have state different policy rulings. From the FCC, we have an FCC orders, and we have basically the form instructions, but that's pretty much it. So a lot of categories were left very clear. For example, we touched on web conferencing earlier. We have that there was a WebEx intercore ruling, and then there was also a WebEx ruling and a WebEx appeal to the ruling. What the upshot of that was, in terms of web conferencing, is that the FCC established jurisdiction over the web conferencing, but how these rulings apply to cloud collaboration services, for example, is totally unclear. We only know about what the FCC has ruled on. So that's one problem. There's a lot of ambiguity in the FCC ruling. So you'll come to us to impose for impositions where it's more or less we're able to establish some black and white rules on the state and local level. But when we come into FCC, it can get murky. The good news is that when you're working to work with a database provider, it's very important that you have a flexible system and override, which is going to lead into our next section where we're going to discuss the system we have.
Okay, Linda and David, I think that, first of all, you've shown that telecom tax is extremely complicated, and you really have to know what's going on with telecom tax to figure out where your situation lies. We do have a question that came in, and I think, Linda, you touched on it earlier. They said, how do we know which taxes apply to our particular products and services? And I think they're kind of getting to how you match one with the other. If you can address that.
Well, there's kind of two different cousins. There's sourcing rules, and then there's Nexus rules. The sourcing rules is how to source the service. So depending on where the customer is located, that's typically where we'll source the call. So especially in mobility, those rules are very clear. With something called in 2002 the Mobile Telecom Sourcing Act, which established something called the primary point of use, or the PPU. The customer presence, that would be the place where you would source the customer. However, there's Nexus. Determine, do I even have what to talk to in this jurisdiction? So I may have a customer in the state of Georgia. The question is, do I have Nexus? So it gets a little tricky. The bottom line is typically the Nexus in telecom follows where you service the customer, unlike other types of Nexus rules. So you kind of have a Nexus de facto on the ground based on your customer, and then you'll be sourced at the same time also to customers. That's kind of a de facto rule, but more could be discussed about that offline.
Okay, great. And in terms of questions, we have lots of questions that have come in. Keep bringing them. We'll interject them when we can during the presentation. We'll cover them at the end. If we can't cover the questions at the end, you can be certain that we'll answer them by email after the webinar. But Brent, I'm going to kick it back to you for a second. Now that we kind of understand our obligations, can you make sense of all this in terms of compliance? And I see a slide here on process, if you can walk us through that.
Yeah, well, I'll do my best, right? As David pointed out and glaringly reminded me why I'm glad he's on the research side and I'm not. The process itself, while never simple, can be, I guess, streamlined and automated as much as possible. I know everyone, especially 40% of the people on this webinar are new. I'm sure their heads are spinning a little bit. Just to kind of go through the process in general. Okay, so now I'm a communication service provider, and again, I'm looking at this from the 40% view for today anyway. We have a whole compliance process that we've kind of identified on this slide here, on this next slide. So, first and foremost is the registration process, and there's 3 levels of registration, right? There's federal, state, and local. And depending on what type of product or service you are is dependent upon how you register. From what I saw in the sign-ups, the vast majority are in the VoIP space. So forgive me if today is a little bit more geared towards the VoIP and you're not in the VoIP space. If you're not and we're not hitting your questions, please feel free to send them to us. But I'm going to attack this at least from the VoIP area because that is the fastest and most expanding area of communications. So the compliance process at the federal level, you can kind of, or excuse me, let me back up. The compliance process in general. So you've got your registrations at your 3 levels. Where that has to occur from the state and local level, I'll discuss a little bit more in a future slide. But right now, we can just kind of break the process itself out. So you have your registrations. That allows you to legally sell your products and services and invoice for those services. Okay, so now I've sold them. I've got to do something with that and get those taxes on my invoice. So how do I do that? Well, typically the most efficient way to do that is use a communication-centric billing solution that is integrated with a tax calculation engine. If you do use a communication-centric billing solution, then it will be able to handle all the nuances and how you invoice and how you procure your services. It'll make a web services call to your tax calculation engine, which will take all those ridiculous rules and hundreds of variations and thousands of tax laws, and will actually be able to feed that back to the billing system instantaneously simply by passing the transaction data to us. That transaction data usually consists of, again, a point of origination or place of primary use of the service, the revenue amount of the process of the transaction itself, as well as the product ID. Once that information is received by the taxing calculation engine, it's going to be passed, or 2 things will happen. First of all, it's going to calculate the taxes. It's also going to send the taxes back with the nomenclature to the billing solution that tells it, okay, this is what you need to put on your invoice because this is what they need to collect. At the same time, it's also going to generate reports of, okay, what did you sell, where did you sell it, who is imposing a tax on you, and how much is that tax or fee that has been imposed on you. those reports coming out of the SureTax solution or whatever calculation engine you're using are usually going to go two places. Number one, they're going to go to an archive. So within SureTax, we keep it within our system so that you have a clear audit trail. But it's also going to be sent out to a compliance vendor, usually if you're outsourcing your compliance operations, who will take that data, create the returns themselves, have you sign off on those returns, request the funds in order to remit those payments, and then those payments will be remitted on your behalf. So if you kind of want to think of it as kind of three steps in the process: registration, allowing me to sell, billing and calculation in the middle, and then reporting and remittance at the end. That's really the whole process encompassed within the universe of what it is that you have to do. So I'm going to talk a little bit more about the registration side because I think a question came in about registration, and that is, well, where do I need to register? What do I need to do? How do I know where I need to register? Do I need to register everywhere, or what is the process? I saw a question come in around that. So I'm going to address it kind of two ways. First and foremost is the FCC at the federal level. If you're going to provide communication services of any kind at any time, you need to register with the FCC, period. The FCC is not an organization that you want to mess around with. It's not if I get big enough, I'll register with the FCC. I'll register with the FCC at some point in the future. You really need to register with the FCC right out of the chute. Now, what happens after you register with the FCC, there are some rules around what is required from a compliance reporting standpoint going forward after the fact, and your local compliance professional can help you with that. But the notion that, well, I'm not really required to comply with that right out of the chute is just a very, very dangerous game to play. Now, at the state and local level, as David mentioned earlier in the presentation, with communication services, and I'm going to kind of stick to the VoIP side, your Nexus is not created by physical presence. Your Nexus is actually created by where your customer is located. So what can happen is you are providing, say, hardware sales or other types of services in 3 or 4 states. But then suddenly you decide, well, I'm going to provide VoIP services, and I can do that nationwide because there's no limit, there's no reason I can't provide service to someone in California as easy as I can in Tennessee. Well, then you suddenly are creating Nexus for yourself in the state of California, and therefore you would be subject to registration at the state of California, for instance. Now, right offhand, I want to say there is about 18 states that require separate types of registration. So if you're a business operator today, you're familiar with the DOR and the Secretary of State. But if you are a VoIP provider, there are about 18 other states, I believe, that require a PUC, that have a PUC that require a PUC registration. So you definitely need to check with your local tax professional again about those states where you need to register to be a VoIP provider. Or those that require a PUC compliance end. I wanted to jump over here also to this slide. The purpose of this slide right here is to simply just kind of show what can happen from a Nexus standpoint. The orange dots, if you will, right now say, well, this is where I normally am. My headquarters in Texas. I'm selling hardware providers in all of these areas. But now I'm going to provide VoIP services. And then the little white stars now represent, okay, well, now I have VoIP customers in all of these states here. Well, that could mean that you now have Nexus in all of those states. And not only do you have Nexus in those states for communication services, but potentially you could also have Nexus for your hardware sales. So if today you were selling products and services to one of these states, but you didn't have physical presence or Nexus there, you suddenly could have physical presence or Nexus for those services as well. So it's very important that you, again, talk to your tax professional about the impacts of selling these services into states that you don't currently have registrations for. I also saw basically a question that came in just a little bit. I want to kind of provide a clarification. I kept referring to an FCC registration. USAC is actually the organization that, I guess for lack of a better word, manages or is an audit wing of the FCC. So your registration is actually with USAC. You're obtaining a USAC filer ID. So I wanted to kind of clarify that because someone did ask that question, and I'll apologize for kind of using those terms, interchangeably because that's not accurate. So I just wanted to kind of clarify that for the purposes of this webinar. Again, to go back to the point of the Nexus, though, is it's very, very very pertinent that you ask your professionals about, okay, how is this going to impact me? The next question is about, okay, well, let's say it does impact me, and I now have Nexus in these areas. Does that mean I need to go register in all 50 states immediately because I'm going to offer services in all 50 states? And that question is really, again, a little bit better answered by your tax professional, your local tax compliance officer. But what I'm going to give you is just basically what we have seen as a common kind of trend, if you will, in the marketplace, and that is taking a look at the services and the customer base that you are entering into a particular state, looking at the growth pattern in that particular state, looking how that impacts your current business line from a Nexus perspective, looking at the filing frequency in that particular state, and then developing a plan to, as you move into particular states, register and file in those particular states. Because once you're registered in the state, you do have to file. Now, registration is not, again, an optional task, but what we are seeing is that together with compliance vendors, people are taking a staged approach into how they enter into registering particular states and services. Situsing is very, very important to determine where your impositions lie, where your exposure lies. Anytime you're providing a VoIP service, we prefer that you get to a ZIP +4. Zip codes often cross multi-jurisdictional boundary lines, and therefore you could be remitting taxes or fees and 911 charges to the wrong authority if you don't have a ZIP +4. So we encourage a ZIP +4. We do have the ability to scrub to a ZIP +4 if your solution doesn't have the ability to scrub to a ZIP +4, again, because it is critical, especially things like 911 fees. When you are paying taxes to a jurisdiction and you're incorrectly paying taxes to a jurisdiction or the wrong jurisdiction, rarely have we seen the ability to say, well, we've been paying it, we've just been paying it in the wrong place, and they go, okay, well, we'll give you credit. Typically, it's like, well, we're sorry for that, but the imposition is still imposed on you in this area. So therefore, you need to make sure that you are registered and remitting in this particular location. For the essence of time, I'm going to kind of speed up here a little bit and move ahead. I'm going to jump over to a calculation engine. What is a calculation engine versus a rates table? Because that is, again, another common question we hear and an area that we want to address. The critical difference between those two things is applicability. If you have a rates table and you don't have visibility into the logic on how those rates are applied, things can happen. The analogy I put here is, it may work, it may fire, it may not, or it may blow up in your face. We have seen situations where utilizing a very accurate rates table, someone was audited in the state of the state of New York, and simply because they didn't apply the tax on tax correctly, they were audited and faced some severe penalties. So a calculation engine, the key difference between a calculation engine is all that logic on how to apply a tax, what tax is applied, the methodology behind it is all resident in that calculation engine, as opposed to someone who's not a tax professional, doesn't know the intricacies of how these rates are applied, trying to take a rates table and enable those into their solution. So I see a lot of questions coming in. Mark, it looks like there's a lot of questions coming in. I'm going to pause here and let you kind of tee some of those questions up if you'd like, as opposed to continue to move slide by slide. I think it's always appropriate to try to ask as many questions or get as many questions addressed as possible.
Very good. Yeah, we are getting a lot of questions. Let me just get to a couple we can pop in right quick. One question is, what about satellite TV, direct TV, which is a form of communications tax? It's the industry I'm in, they say. Well, what about that in terms of taxability? David or Brent?
Yeah, I'd definitely throw that to David's side.
Yeah, I mean, it's something it's something we do cover in our database. About a little over about 20% of our database is computer services, and we were talking about categories and buckets before. The basic question you need to ask when you're looking at a service is this particular service fall under a communications quote-unquote category or computer services? So when you get into issue of content being delivered over IP, if that's the case here, if it's IP delivered content, it would be taxed one way. If it's just because of basically every service that's emerging technology like this kind of satellite TV or direct TV, you really need to understand, in this particular case, would it be communications or would it be telecom? So I would need a little bit more information, perhaps offline, about the product and delivery. That's usually most of the heavy lifting we do up front when we're working with customers onboarding is to get detailed product. But either way, there's definitely going to be tax. Question is it going to fall under the like an IP delivery of content, or is it going to fall under more of a communication service? And that would probably be more detailed to go into that.
Okay, so I'm going to bring a similar question to you again, and I'm just going to read it directly. I think this is yours, David. We're an MSP and offer our customers private cloud environments. We own all the gear and contracts with the phone and MPLS providers are in our names. We in turn charge our customers a monthly fee to use these services. Are these taxable to the customer?
So this kind of touches on what Brent was saying before. We talked about who's a telecom provider, and if you if you're offering customer dealing with the end user customer, like we mentioned before, and providing the service, doesn't matter that you're reselling it. The fact matters you're the one who ultimately packages and delivers it to the end user customer. You would be liable for collecting and remitting the tax. So that's a general rule of thumb in telecom. Whoever touches the end user customer kind of carries the ball. I mean, there's possibly exceptions to that, but that's the general rule.
Okay.
Yeah, sorry, Mark. Just to kind of step in, it could be more complicated than this, but basically what we kind of default to is whose name's on the bill, right? So I'm a user. I can pick up my phone, regardless of how it's enabled. I can pick up my phone, make a phone call, and I get billed for that, the ability to do that. When I get billed, someone's name's on that bill. Typically, if your name is on that bill, then you're a communication service provider. Again, there are more details around that, but as a general rule, that's an easy one to kind of follow.
Yeah, and there are, there's always a hierarchy, or there's always a dichotomy of regulatory versus tax. So on a regulatory level, a lot of times these companies are, if you're buying communication services, so you're perhaps paying certain communication taxes, including federal universal service fund, you might not be registered yourself. What gets complicated is that in that situation, first of all, I don't think that USAC would be particularly happy about it before we mentioned the other audit wing of the FCC. The other issue is that there's a markup. So you're buying it, let's say, for whatever, X amount of dollars. You're buying it for $25. You're selling it for $39.99. So there's a markup there. So even if you've, quote-unquote, paid the telecommunications tax as a reseller, but you certainly there's a gap for markup minimally, and the fact of the matter is the FUSF does not reckon payments made to exempt one from liability, so that if and when you come around to registering with FCC and USAC, and you tell them your start date of business was in 2005 and now it's 2015, they're not going to accept the fact that you've paid this FUSF for 10 years. They're going to want to do an audit for that period.
Okay. We have another question that's come in. I appreciate the answers. This question relates to what type of billing system is he talking about. And Tim, I tell you what I'm going to do. I'm going to tee up your slide, and if you can tell us about the practical implications of integrating a tax calculation solution, and I'll turn it over to you.
Okay. Yeah. Thanks, Mark. So an advanced telecom billing or commerce platform, typically facilitates the compliance process by integrating the expert systems we're talking about in this webinar and automating the workflow processes. And in most environments, it sits in between a CRM and ERP platform in order to facilitate the entire workflow, not just the telecom, but the sales, quoting, the ordering process, the activation process, and ultimately the invoicing process. So it's the glue that pulls all of these systems together, including the CRM and the ERP, as well as the expert systems that we've discussed in this webinar, and any systems from upstream providers where you might be provisioning or reading data from upstream providers. So as far as the telecom commerce process goes, there's really 6 key components. The first one I'll talk about is integration, and integration is required for billing, and it's also required for provisioning. So those are the 2 key buckets that we look at in integration. Are we integrating for billing, where we're reading usage reports or from an upstream provider, or integrating with a tax engine like SureTax, or are we doing some level of automation from an upstream provider like provisioning receipts after the ordering process is complete? I want to talk a little bit about the process one more time as far as how it's facilitated by our platform, and I think maybe this specifically addresses the question. And it's an example of how the tax engine integration works within a billing platform. So in a billing platform, you typically start with the creation of a service catalog. These are all of the products that you're selling, the VoIP Gold bundle, the SIP trunk, the 10 gigabit data plan, whatever it might be. Each one of these products is mapped to a specific tax code, and the folks on this call can help you with that mapping process. And so this is your catalog. Then you get a customer, and you assign that customer an item out of that catalog for billing. And so now an end of period occurs. There's some revenue associated with that product that is associated with that customer. And that customer has a service address that dictates the jurisdiction in which that customer resides, or where their tax jurisdiction, which tells us what taxes they're responsible to pay. So this information at the end of the billing period is sent over to SureTax electronically via an API. So the product, the revenue associated with the product, and tax map or the tax code, the service address, and back comes from that all the taxes and fees that are associated with the revenue for those products in the jurisdiction in which the customer resides. And then those taxes and fees are placed on the invoice, and the invoice is typically electronically sent to the customer via PDF. Customer pays the invoice, you collect the taxes, and then it's managed from there on the compliance side as far as escrowing that money and filing the taxes and so forth. But that's how the integration facilitates this process. It's not up to you to really understand how these taxes are necessarily applied. That's SureTax's job, and if the tax mapping is done properly, then those taxes will be calculated correctly. So another key component is bundling. Many times our customers might sell the gold bundle, and that bundle could consist of 5 or 6 different components. A good example might be a VoIP bundle, where you have a VoIP license and a DID and some usage, and maybe even some E911. Well, even though you're selling that as the gold bundle, each one of the components within that bundle is taxed as a separate tax category. So it's very important that you have a system that can facilitate the sale of a gold bundle, but calculate the taxes of the at an individual product component level in order to reduce the tax burden for your customer, because otherwise the gold bundle must be taxed at the highest rate of all of the components in the bundle, which would probably be the telecom usage. The third component is the ability to take your product to market. A customer portal is important in demonstrating the value in being able to show your customers or help your customers manage their payments, do reports, different types of reports, have a shopping cart with some type of an accurate tax calculation when they're building their shopping cart to check out. The fourth is the ability to measure. So we talked that's that other level of integration where we're measuring the usage. A good example here would be a 10 gigabit mobile plan, where if you're selling that 10 gigabit plan, you need to be measuring the actual usage against that plan, so that when they are 90%, when your customer's at 90% of that plan, you can notify them and give them the option to go into their account, i.e. the market I just talked about, and upgrade that to the next usage. Or if they don't upgrade, continue to measure that usage and then rate that usage beyond their plan. This type of prepaid plan is very profitable. It's something that most providers are looking to facilitate, in that when that customer buys that 10 gig plan, they're typically buying it because they really only plan on using 7 or 8, and so you have an oversubscription process here where your profit margins are expanded because you as a provider typically only have to pay for what is actually used. The fifth is the billing and invoice process. So really the invoices should include accurate, detailed data, and it should be in a format where the customer can understand what they're paying for. Of course, all the taxes and fees should be on that invoice, and we also on that invoice you should have the capability to include your own fees. And one of the key fees that most providers use to recover the cost of all of these expert systems and technologies that are required to calculate taxes and collect taxes is a regulatory recovery fee. So most of our providers use a regulatory recovery fee to recoup their costs in running calculating their tax. So the sixth process is optimization, where where you're taking all the data that you're consuming and you're running some type of business analytics, which are extremely important these days. And these business analytics can do many, many things. Some common things are revenue assurance, where I am looking at my cost data from my upstream provider and comparing it to my sell data to identify billing errors. I may be getting billed for something from my upstream provider that for some reason is not associated with a customer, and there's lots of different reasons for billing errors, and billing errors are very common. We typically see upstream providers have a billing error rate of approximately 20 to 25%. 80% of those errors are in their favor. So having a system that can identify these errors and allow you to dispute them is very important. It's also very important to be able to understand what your profit margins are, and you need analytics to be able to measure those costs and compare it to your sell data in order to understand at a product by product and customer by customer level, where your margins are. So, in summary, what we see is that service providers really need to leverage these external resources to manage the compliance process. It would be very difficult to manage this process without having some automation in play. And this automation is not only required in order to remove the complexity, but also to enable you to focus on your business and reduce the amount of resources that are required to manage the tax and compliance piece.
Tim, I want to thank you for that. Your expertise shows through, and that was fantastic. I especially appreciate you doing the pickup and covering the bundled piece, because there are a lot of people out there that bundled services, and you were absolutely right on the tax implications there. So thanks so much. We have a couple of questions that have come in, but we've reached the end of our content. I just want to summarize, because we've gone a long way so far. So, just as a summary, for communication service providers, you are required to comply, and that is a broad requirement. We know that taxes are complex with thousands of authorities and many rules. Tax calculation solution can assure proper applicability and calculation, and also, especially versus a manual process, enhances your audit defense. And as Tim proved, tax calculation can be integrated into your entire telecom commerce solution. So we've come a long way in our time. We're reaching the end. We had some questions, and I just want to get to some quick ones that we can cover. One is, somebody asked, does SureTax work with QuickBooks? Yes, and a variety of ERPs and integrations, and you can see those on the SureTax website. Someone else asked, what about compliance partners? What happens when you need to file after the reports are produced? And again, I'll refer you to the SureTax website. Under companies and partners, you can see resources there.
Hey, Mark, not to interrupt you, but can I speak to the QuickBooks question real quick?
Yes, please.
Just as a note, yes, we do integrate with QuickBooks. I would highly suggest, however, that you reach out to someone like Tim's group at BluLogix. I think you'll find that what it can do for you versus trying to use something that is not designed for communications taxes, communications billing, it far outweighs the cost. So while, yes, we have done that in the past, and typically what happens is customers will do it for a few months and then go, what, this really isn't suited for what it is that I do, and then they find themselves working with a true communications billing design solution.
And that's a great point. David Rubenstein mentioned something that I think would be helpful. I'm going back to the poll question where it shows that 40% of the people are new to telecom. And David referenced Newton's Telecom Dictionary, I believe. It is what it is. And you can find Newton's on Amazon, Barnes & Noble, and all your favorite bookstores there. But that's a good place to get started. We have a specific question, and we have just a couple more minutes. And here's a specific question regarding resale. The question is, we're a reseller using our own business name, and we get billed for federal taxes, which we pass on to the customer, but we remit to the provider. How do we guarantee that the taxes are being remitted to the proper federal agency? And there might be a couple of aspects in there.
David, you might want to take this, but I'm going to, just from my experience in that, you don't, and it's very difficult, which is why we highly recommend that, especially at that federal, if you're being charged USF by your carrier, that you take control of your own destiny and take over that process. If you are, providing communication services and you're looking at it as a growth area of your business, it's something you're going to need to do eventually. We highly recommend that you do it as early in the process as possible. SureTax is designed to handle all federal, state, and local level taxes. Get them to an invoice with whatever solution you're using. The cost to file and remit to the FCC is is so minimal compared to what the penalties can be if you're audited and you're not doing it properly. Rarely do I see successful interactions between yourself and a carrier where you've been remitting those taxes to them and then find out at a later date that maybe it wasn't done exactly correct. And oftentimes the carrier will have different kind of policies than what would be applicable to your company. So that's
very good, and we appreciate that, Brent. And we have hit the top of the hour, but that doesn't mean that we're not going to answer all the questions that have come in. I believe with this service, even after the webinar, you can ask questions, and we will still look at those and respond to those. Now, I want to thank all the panelists today for sharing their expertise with the group. I'd also like to thank all the attendees for joining us. I've enjoyed the session. I hope you have too. Soon you're going to receive an email link so that you can share today's webinar with a colleague or refer to it for your notes. And also, if you have more questions, let me put a couple of names up there. Sean O'Brien is our producer behind the scenes. You can send questions over to Sean if you wish, or you can send questions directly to Brent, and Brent has graciously offered to traffic those questions to the appropriate people. Again, thank you for joining us. You'll get an email with the links soon, and enjoy the rest of your day.